Hey everyone, welcome to Tony Forex Academy, your go-to source for Forex trading insights and strategies. Are you looking to level up your trading and you want to make smart decisions in Forex market? In today's video, I'm going to dive into the key factors that impact various currency pairs, especially for beginners, and that we will look from the economic indicators to interest rates and market sentiments. So how are you going to use these strategies and these methods? So we are going to use them to refine your trading strategies. As a beginner, you need to understand some factors that influence currency pairs movements, and whether you are a beginner trying to navigate the forex world or an experienced trader looking for fresh ideas, this video or this guide has you covered. And for that, let's get started with the trading currency pairs that can be profitable, especially if you approach them with caution. So at Tony Forex Academy, some of the various pairs that we recommend for beginners include like for example the Euro USD. As you can see here, Euro USD, this pair is highly liquid and has low spreads, and it always tends to be less volatile compared to other pairs. So it's also widely traded because these are two big economies, the Europe and the US. So these pair offer plenty of analysis and resources for learning. You can see various demand and supply. You can see you're almost forming a W, like the demand and supply. The movement is quite predictable as we even move the previous time minutes behind. You can see it's like almost forming this demand and supply. So the price movement for this pair is quite predictable for price movement, and you can take advantage of this movement and make money, as opposed to very volatile commodities like gold. If you try that as a beginner, trust me, you're gonna lose money quite fast. So another pair is the Euro USD. So this US dollar against the Japanese yen, also known for its liquidity, this pair is influenced by various economic news and events from both countries, making it easier to predict movements for beginners. The Japanese yen is probably known as a safe haven currency. Also, the dollar is also known as a safe haven currency, but not as much as the Japanese yen. We've seen that especially during the tariff announcement by the Trump administration. Quite various pairs against the yen, they lost value, and the yen gained or yen strengthened. Also, this pair is quite predictable for beginners. You can take advantage of this movement, these two economies. And another pair is the cable or the GBP USD. This is the pound against the dollar. While it's slightly more volatile than Euro USD, it's also still manageable for beginners due to its liquidity and active trading. The London session we know, and the New York session, sometimes they overlap. When we look at the time of the day, the London session opens at 10, and normally, depending on your region, the New York session opens quite later. And this pair is also not that volatile. You can take advantage of these, and you have to know that these are two great economies that trade together. And the pound is very strong. Also, the dollar is also very strong, so they go hand in hand. The news that affects the pound and the news that affects the dollar always impact this pair, and it's always quite predictable. For example, news favoring the pound will make the pound stronger, and news favoring the dollar will always make the dollar more stronger, and we can always see this movement to be quite predictable. And also, when we look at the Australian dollar against the US dollar, this pair is often influenced by commodity prices, particularly gold, and can often This can always help beginners learn about correlation in global markets. So the other pair is this one. This is also US dollar against the safe haven currency, that's the Swiss franc. So the US dollar against the Swiss franc, also known as safe haven pair, it can be relatively stable during uncertain market conditions, especially when there is no chaos in the market. We saw, if we see these cells, these you can see, for example, this part, these are during moments when tariffs are being announced around the world, and China is retaliating. US is also adjusting the tariffs against Chinese goods, and we can say that more people are dumping the dollar to get the Swiss franc, because we know Switzerland with secrecy when it comes to even holding your money. It's safe, like it's more safer to have your money in Switzerland during these economic tensions. So for beginners, beginner traders, always start with the major pairs, these ones, especially these ones that we've mentioned in this video, because they tend to have lower spreads and high liquidity. Also, you need to focus on learning fundamentals and technical analysis to understand market movements. What do we mean by fundamentals? Fundamentals are like news, these major news. You need to be updated. Make sure that you log into, or you are tapped into various key sites that give you news. You can always go to my FX book. You can try to check on Forex Factory news, and even on national TV you can tune into maybe Bloomberg TV and be updated. Always be on the lookout of any major news. News, we mean these high impact news, not scheduled news. And for example, on my FX book, maybe wars, or maybe a cyber attack on maybe oil facilities, anything major. Those are high impact news, and those are fundamentals. But for technical analysis, as these are analysis that we use daily. For example, trend lines we use to check if the pair is bearish or bullish at the moment. We have indicators. We have various indicators in this section. Those are technical analysis where you just apply them, but fundamentals are major market movers. So also, as a beginner, you can try to use a demo account first to practice trading without risking real money. Demo account, the difference between demo account and real account is your emotions are normally not that tied with the demo account as opposed to the real account, because real account, you know, this is my money. If I see a red, I know, oh, I'm quite losing here, and when I see a blue or green, I know, oh, at least I'm gaining. But trading comes with a lot of emotions. So when you are doing your demo account, try to mimic the real account and try to imagine that this is your real money, and just enhance your skills by using the demo account. Apply, also backtest your strategies, and so on and so forth. So another thing as a beginner is that you try to manage your risks by using stop loss orders and avoiding over leveraging. Why is stop loss always there, but most people tend not to use it? For example, a victim of this. Many times before I tried to use not to use the stop loss, and this made me lose a lot of money during my trading journey. So it is advisable to know and manage your risk, use stop losses, and always remember that you need to protect your capital. It's better to protect your capital, because getting another capital is hard, but getting another setup is easy. So remember that trading comes with risks, so it is essential to educate yourself thoroughly and start small. Also, we need to understand that There are several factors that influence the movement of these various currency pairs that we've talked about here, and understanding them is very key. It's very key to making informed decisions. For example, in the economic indicators, you need to check reports like GDP growth, employment figures, inflation rates, and consumer spendings, which can impact these currency pairs, because strong economic performances typically strengthen our currencies, and while poor performance of these economic indicators like GDP, they may weaken. And you also need to check interest rates, because central banks normally set interest rates and higher rates generally, which attract foreign investors who seek better returns, and this will always increase demand for the currency. Conversely, lower rates normally reduce a currency's value. We know that, and that's why when the Feds normally lowers the interest rate, we see how the price movements. So another thing is, for example, what is happening currently. You need to check news regards to geopolitical events, because political instabilities, elections, or conflicts normally leads to uncertainty, causing currencies to fluctuate. This is because stable political conditions tends to support a stronger currency. Another thing is looking at the market sentiments. These you can find on those various, I will put them here, like you can check market sentiments on my FX book, Forex Factory, or any other site that will tell you the Forex, the market sentiments, where investors' confidence and perception of a country's future economic performance can shift currency pairs. And we also know that positive sentiments often drives demand for a currency. Another key important thing that you need to consider while trading as a beginner, supply and demand, very important. Like any other market, the forex market is driven by supply and demand, and if a currency is in high demand, its value rises. If supply overweighs demand, its value drops. For example, if you look at, let's use this one, a USD CHF, we can see that if a currency is in high demand, its value rises. What happened? There was a when people are looking for safe haven, what happens to the dollar? The demand for CHF is high. This is the base currency, and the quote currency is CHF. So what happens to CHF? People dump USD or the US dollar, and they bought the CHF. So in these instances, mostly the base currency lost value. So you need to understand the supply and demand. There's more demand during this time for safe haven currency, the JPY, CHF, or even gold. We also know gold is, look at gold. Let me show you gold here. What has happened to gold over this period where there's a lot of tension? Alright, let's load it up on the screen. A minute. It's trying to load. Let me try to load it here. Okay, we can check. Gold is still bullish, and these are some things that I put here. Gold is very bullish, and let's go to the 4-hour time frame and check how. Look at how gold has been. Gold has moved all-time high break. This was just a few on 11th of April. Then it broke this level again. Break of structure here. We moved, and now we are still cruising up. Reason being, there's a lot of tensions around the world revolving. Different countries, tariffs and everything. So safe haven commodities. So also we need to, as a beginner, you need to look for news concerning central bank policies, because actions like quantitative easing, meaning injecting money into the economy, or tightening monetary policy, that is reducing money supply, these ones always affect and currency strength. Another place where you can check these, you can check the currency strength meter. You can just Google that currency strength meter and you check. It is always very live, and you can check which currency at this point is stronger than the other, and it keeps moving. You can also check the short-term, medium, and long-term currency strength. So you also need to use these factors effectively to help you develop more informed and strategic approaches. So how can you do this? Make sure you monitor these economic indicators, stay updated on interest rate decisions, analyze geopolitical tensions, understand trade balances, and then also observe market sentiments, whereby you can use tools like sentiment indicators to gauge the market optimism or fear, and this can help you predict short-term trends. And also you make sure that you stay aware of news that shape investors' confidence, as currencies may always react quickly to surprises. Also, you need to make sure that you use technical analysis, the trend lines, the very simple technical analysis tools. Make sure that you combine the factors that we've mentioned above with chart patterns, trend lines, indicators, for example, like the RSI, MACD. If you know how to use MACD, you can use the Fibonacci retracement, this one. Also, these more another technical analysis tools that you can use are the moving averages. These can make sure that you fine-tune your entry and exits, and don't stay longer in the market. And when you see you are in too much losses or too much profit, do not take the profit, cut losses, do not take screenshots. So ensure that you also use historical price movements to predict how currencies typically react to similar events. And then make sure that also you utilize the central bank signals. Risk management is very important. I will keep saying this because, for example, you need to use your stop loss orders to limit losses in case your analysis proves incorrect. And then also you need to avoid over leveraging and diversify your trades to manage exposure to unpredictable events. So without going further, you can just say that make sure you follow Forex news, use reliable sources to stay informed on breaking news and developments that affect currency pairs. Also consider subscribing to a channel or various platforms that provide timely analysis and podcast. You can follow us. There's a link on this channel that can take you direct to our Telegram channel, where we constantly post, and there are various signals that we post for free. And if you need for subscription, you can contact the admin and you'll be taken to a page where there's constant and timely signals that will help you get into the market the right time after proper analysis. So make sure that you consider subscribing, and I wish you happy trading, and make sure that you use your risk management. Remember, trading comes with the risks, and this is not a financial advice. This video is just for educational purposes only. I wish you happy trading.